It would be a lot easier to talk about the economy and what it looks like in the U.S. if we were getting official government data. We know that Friday we were supposed to get that jobs report, another jobs report delayed. When you take a look at all the different sources that we have, alternative measures of data, and you try to really string them all together, what is the state of the labor market right now?
I would say squishy. Employment growth has been very soft, but obviously there's been a slowdown in supply of labor through immigration enforcement. As recently as July, the chair was saying the labor market's in a curious balance. In September, they say there's now a downside risk to employment, which is the rationale for the cuts. But I guess if I had to pick a term, it would be squishy right now with incomplete data.
Yeah, and it's interesting when you lay that against what we're seeing when it comes to inflation. It seems like being closer to 3% than 2%, perhaps this current Fed has made their peace with that, because you consider Federal Reserve Chairman Jerome Powell saying that that December rate cut is not a lock. Perhaps we're comfortable with inflation where it is, but maybe it's the labor market we need to be a little bit more concerned about.
Yeah, you know, for some time at Pimco, we've been talking about the 2-point-something inflation target. And it sounds silly, but I think so long as the first digit in the inflation rate is 2, I think there's some comfort level at the Fed that that's close enough. They can cut rates, look at other considerations. It's interesting, you point out to the meeting last week, he said that not once, but I think 6 or 7 times. I lost count of how many times he said December's not a done deal, or there's a range of views on the committee. So he got his message across, Katie.
I wonder, first of all, I thought you were great on the Fed Decides last week. That was a fantastic program. Bob Michael, JP Morgan, was saying he doesn't think that the Fed is operating blind or in the fog, because they have, after all, 12 different regional banks. They have hundreds of analysts and economists working for them on the phone all day long with business leaders and institutions. Is that the case? Do you think the Fed really does have a clearer view of the economy than we do without the BLS data?
I think they have as good a view as you can without the official data, but there is no doubt the official data, I think, really anchors not only Fed but private sector forecasting, in particular the granular detail. But I will say, Matt, in my career now over several decades, one of the big evolutions has been more of a focus on high-frequency, real-time data. We started doing that at the Treasury Department 20 years ago. So the Fed and many private sector firms are looking at very granular, high-frequency data, and that can really complement the official data, but you need both. And as the chair said last week, the longer this goes on, then potentially the more of an issue it comes in terms of making policy decisions.
You mentioned the 2-handle on inflation, and when you look at CPI, it's unfortunately a 3-handle. So they're 50% above their stated target, which is like a lot of percent, right? And I wonder if really central banks around the world are happy to let, especially those with countries that have an absolute ton of debt and profligate spending, are happy to let inflation run high, because that way we can deal with this debt problem that otherwise there's no solution to.
I wouldn't say that they're happy. I think of probably a term I prefer is they're opportunistic, in the sense that they don't like inflation of 4, 5, or 6. They would love it at 2. During my time at the Fed, inflation was rarely got up to 2. Indeed, for the 10 years before the pandemic, it only hit 2% in 2 or 3 months. And so we've gone from a decade of stagnation, negative rates, to a decade, for a variety of reasons, in which inflation has been hot in many countries. Probably the best counterexample right now is the Eurozone, where inflation is now running at about 2%. So it is possible, but there is an inflation hangover in many parts of the world right now, for sure.
And how do you go about fixing that? I mean, you think about the past several years, we've had rates certainly higher than where they have been over the past decade, especially coming out of ZIRP, that sort of environment. It seems like getting closer to 4.5%, 5% on Fed funds wasn't enough to really nip inflation in the bud, bring it back to that 2% target. Is this just something that the economy is going to have to work itself through, and over what time frame?
A year ago, or now I guess 14 months ago, when the Fed cut in September, inflation was running at around 2.5%. So it wasn't right on target, but it had downshifted. The unemployment rate had gone up by a point. And so I think the Fed can make a plausible case that they were on a glide path to that 2% target. Now, we're obviously further away now. A lot's happened since then. Probably tariffs are pushing up inflation, although disinflation in other categories, gasoline prices are down. So I think it's a range of factors, but you raise a good point. The longer the length of time that the Fed is away from that 2% target, the more risk there is the public and financial markets say maybe the target's really not 2%.
I want to ask finally about the control that Powell has over the Fed. And I don't know if it's fair to say that he's losing control because there were two dissents, right? They were on different sides.
Bob Michael said that.
Well, do you think that that's the case? And isn't it maybe healthy to have a little bit of dissent on the Fed? How was it during your time?
So I think two things. I think, first of all, Jay Powell's not losing control of the committee. I think, secondly, I think informed and healthy exchange of views, which sometimes can result in dissent, is really a feature, not a bug. I mean, in fairness, we've gotten lulled over the last 30 years under Greenspan and largely under Bernanke and Yellen and Powell, where dissents have been fairly rare and fairly not particularly newsworthy. But it's a complicated economy. Folks will have a range of views. And on balance, I think it's a healthy thing, especially given, as Jay Powell said, there is no easy choice right here. Inflation's too darn high. We're worried about the labor market. So these are going to be judgment calls. And so I think the dissent is really a feature, not a bug. And I don't think he has lost control.